Stocks ended a volatile session little changed on Friday, but still recorded steep weekly losses. The S&P 500 posted its longest weekly losing streak since March of 2001, and yet the Dow is down 8 weeks, its longest losing streak since May of 1923. FANG stocks have fallen for 8 straight weeks, seeing over $2 trillion in market cap erased. It was a wild week watching retail stocks plummet like Ross Stores, Walmart, and Target. Walmart shares alone dropped 19.5% this week in the stock's worst weekly performance on record. And the cause? Concerns over tighter monetary policy, corporate profits, and inflation. Tell me what I don't know. The S&P 500 has come close to settling 20% below its recent record high, which would represent the index's first bear market since the pandemic in 2020. The Nasdaq Composite had already fallen into bear market territory earlier this year as traders sold growth stocks amid expectations for higher interest rates. As of Friday's close, the Nasdaq Composite had fallen nearly 30% from its record high, and the Dow had fallen into correction territory but has not yet reached the threshold of a bear market. Strategists have underscored that the S&P 500 has been pricing in an increasing probability of a recession. And although we may not currently be in a recession, historically the S&P 500 has fallen an average of 29% around a recession. So perhaps we may have another 10% to go on the downside. But remember, once a bottom has been put in during a recession, returns 1 year later tend to average about 40%. And this has been a brutal sell-off with no safe haven except for maybe cash. So keep stacking that cash while we take a look at the charts. Today we're going to take a look at 3 charts, beginning here with the 6-month daily chart on the spiders, the SPY, and the close on Friday was only up a smidge at 389.63. Recently we've been looking at the trend line or a channel moving on down here with the bottom trend line moving through like that, and then the top of the channel trend line moving through like this. So we're near that bottom trend line. We could get a bounce, but the concern is we come on up and get reflected back and then head down for a lower low. So that's the concern. So let's watch for that. Now here, volume looks fine. Into the MAC doesn't look too bad. It is relatively weak at that near -10 level. So when the MAC is weak, things can happen to drop in the market if you're not careful. We've had an attempt with the fast line in black to move up and through the red line or slow line here, but it got reflected back and we had another bad week. So it is trying to gain some steam and strength to move up and through, but has failed each time. But it's still very close. So I think, again, I'm going to say the probabilities are that this week and certainly maybe the week after it should move up and through. Now, you've heard me say that before, but keep watching. Here in the histogram, definitely we can see the move down and then the bottoming and basing and the move on up, and of course we got reflected right here. So I think we're going to make another try. We'll probably be successful, but how successful we won't know until it happens. But these oscillators are indicating that we should be moving up and through here relatively soon, but the market keeps finding excuses. Moving here into the price rate of change, pretty much the same thing. Very nice. Bottoming and basing here, it looks good. It wants to head up, but it's still weak at -25. Moving into the RSI shows the same thing. A lot of nice sawtoothing on down here. Nice dish, bottoming and basing, heading on up. So things look good. Same thing here in stochastics, and as well echoed by the Williams. But I want to watch Williams head out of that oversold territory above that negative 50 or midline and up here into the overbought territory. So that may take a little while. That's your first signal. The rest of these we're going to improve. But for me, my buy and sell trigger is the MAC. It hasn't gone through, so I'm not buying. So moving up here to the price chart, one last look, and let's go to the next chart, which is the monthly chart. So we're looking at the 20-year monthly chart to see what the problem is, and I pointed this out a while ago. As you can see here, the market seems to have been rolling over, moved on down. It was sitting on top of that 20 EMA, and I said there was a possibility that it could move through that and maybe even down to the 50 EMA. So it has moved through the 20 EMA, and the 50 EMA is in its sights. So that's part of the problem. You could see it better here in the MAC. So the fast line did roll over, and the fast line did pierce through that slow line on its way down. It's gaining some speed on the downside with the differential between the fast line there and the slow line here. That separation is increasing. You can see that here in the histogram. So very fast on the downside. We need this to start slowing down and bottom and base. So until that does, we might have some continued problems with the daily and the weekly chart, and primarily with the price chart. So just continue to be patient. And now let's go to our last chart. And our last chart to take a look at is the volatility index. And as you can see in the upper left, the symbol is $VIX using stockcharts.com. Now, the volatility index is essentially an inverse of the stock market. So when the VIX moves up, the stock market moves down, and vice versa. And as you can see from this top here, moving on down here, this is a very nice dish, bottoming and basing in here with the move on up. So the fear is that the VIX comes down here, it calms down, but then it takes another move on the upside, which would mean downside for the markets. And right now we have higher lows. So that is a distinct possibility for the mix to calm down here, suck in more money, and then head back on up in a spike. And there you go, the stock market heads down. Now I say that because the VIX has some strength, and you can see it here in the MACD that both the fast line in black and the slow line in red are in positive territory above that zero line. And they don't look like they want to head down real fast. Up here in the upper portion of the chart, you can also see the strength in the RSI, also above that midline or 50 level, and it too looks like it wants to continue on up here. So my point, be patient and be careful, because this is a dangerous market. And for today, that's ChewDog Charts. Thank you.